But we're coming into a period that I think looks a lot like Japan from the 80s, where it topped out, and we may not see new all-time highs in the stock market for literally 20 plus years.
And now for something completely different.
Welcome to Market Makers, everybody. This is a pivotal week, the critical week, probably the most important week up to this point in the year. Why? Today's Tuesday. Tomorrow is the Fed. Will they hike? Will they stand pat? You're not getting a cut, that's for sure. I do not think they hike. That is a bullish catalyst. And then we have the MAGs reporting. We have Microsoft and Meta right after the Fed. Then you get Apple and Amazon this week as well. And that's all the MAGs minus NVIDIA, because that's out in August, doesn't count. So where does that leave the market? That leaves us, we are mid-correction right now. We are in the correction phase of the market. That is my belief. And we're going to see this week if we actually get a breakdown or if we're going to consolidate some more and then break out, because I believe we're going to new all-time highs. Sounds crazy, right? You could look at the NASDAQ and say, but Brendan, the NASDAQ's selling off. We're going to look at that here in a minute. As I'm recording, the S&P is down just over 2%. From the all-time high. This, as you have this massive churn in the marketplace. We're going to cover all the cryptos here in this video as well. Everything will be timestamped below. I think you guys are really going to enjoy this video today. I played that intro there with Gareth Soloway. You guys might remember that. He went on David Lynn back in March. Back when the Iran conflict had just started, we were down a few percent, and he made some predictions. The market's going to crash. You're not going to see a new all-time high for 20 plus years. It reminds him of the 1980s in Japan. Do you guys know what happened to all those doomers who made predictions like that? The market getting cut in half. Oh my God, $350 oil. Do you know what happened? Just a couple weeks later, the market did the strongest rally in 40 years. The S&P went up 20%. It went up 1,300 points. The NASDAQ went up 35%. The reason I'm playing that clip again is because the doomers, the people that do not understand economics or market cycles, are back at it again. And of course, Soloway went back on David Lynn's podcast just over a week ago. Lee, throw up that thumbnail. Now he's predicting a 75% crash in the NASDAQ. I'm sorry. It's hard to keep a straight face. Let me show you this on a chart. So NASDAQ from the all-time high, a 75% crash would take you down 23,000 points. You'd be at 7,500 effectively on the NASDAQ. You're at 28K right now. You'd be at 7,500. That's his prediction. Guys, guys, I want you to understand a couple of things. We have trillions in outside investment coming into the country. End of this year, into next year, the deals that Trump made. You have earnings growth that has not just been good, it has been phenomenal. Even this morning, Royal Caribbean, JetBlue, Coca-Cola, they all beat. Earnings growth was targeted to be 12% last quarter. It came in at 26%. It's targeted to be 26% this quarter. It's coming in closer to 30%. We still have earnings coming in. This is phenomenal. They sold off Google because of CapEx concerns. Do you know what Google's growth rate was? 25% for one of the 5 largest companies in the whole world. Their cloud grew 82%. They sold off Tesla because they didn't spend enough CapEx. On top of that catalyst, not only do you have the AI trade, the CapEx required in the AI trade, you have $800 billion being spent this year in CapEx. That number of committed funds goes to $1 1.4 trillion in 2027. 1.4 trillion, nearly a doubling of money being spent. That's downstream effects on the economy. That's downstream effects on the stock market. In 2027, 2028, you're going to have two generational gains, bullish years, right in line with the presidential cycle. We're going to talk about all of that in this video, but I am super hyped. And I am on the opposite side of that trade of Gareth Soloway's or Harry Dent's or Peter Schiff's or anybody else, these smaller channels that are talking about these doomsday scenarios, because none of them will come true based on basic economics and the actual market cycle. So let's look at what we have on the charts right now. Look what oil did. Oil went right up to our target right here at the trend line and then sold right back off, right? Why? Because again, good news coming out of the Middle East, you're back at 78. We fell all the way down to 67 before. If we get some type of deal done, you're going to see the exact same thing again. This will provide relief for the markets as well. Let's go ahead and click through some of this. By the way, guys, be sure to like and subscribe. Click the hype button if you enjoy my content, and I would appreciate it. You can leave me comments there on YouTube. If you want to join us, click the join button on YouTube. Get all my indicators, all my video updates, Ricardo's block state updates, all right there through YouTube. It's not expensive. It's 15 bucks a month. And you can also join over to our Discord. All the education, everything is right there. I don't have tiered membership things. I think all of this should be the price or less than the price of a book. So check it out if you enjoy this content. And if you want to support us other ways and trade these markets, check out the video description. You can support us that way as well. I want to look at the SOX because a lot of people are making a lot of heyday about what's happening with the SOX. The SOX went up 106% since March, April of this year, right? They're down 50%, 10,869. I'm going to do a deep dive on this for members in a video tomorrow and the individual chip stocks as well. Came right down to the 50% retracement, 10,869. Could it come down lower? Sure. Like I said, we got the rest of the mags reporting. What are they going to be doing with their spending? So we're going to see this tied in with semis as well. That next level down is 10K. You're at 10,869 on support. You're at 11,000 as I'm recording. 10K is your next level down. That is also your, what is that, the 90-day RMA. You fell right to the 54 RMA. So again, 50% retracement, totally normal. 100% move between April and June, guys. I mean, 100+% move, totally normal. Thing you want to look out for is the ABC, the rebound for a double top. If you fail here on the SOX, 13.3 to 14K, that could be a top right there giving you a double top. That's what you want to pay attention to. And if you pull back and you can hold support and flip it, which is what I think is going to end up happening, then you're going to be going up again into new all-time highs. So there's things you can look at. If we look at the S&P, 7450, again, does this look like the market's cratering? This with all the rotation and the market. And that's the big thing, right? Like that is my view on the market, is that we are rotating, not liquidating. But let's ask Michael. Michael might know, Michael Ventura. He's smarter about flows than I am. Lee, play Michael.
Great question. And I think one of the things that gives us a lot of confidence in this capital rotation that we're seeing happen right now, if you go under the hood with some of the volatility that we've seen intraday in the market, it's momentum down dramatically over the last 30 days, growth down dramatically over the last 30 days. It's a reallocation of capital into other parts of the equity market. It's not a withdrawal of capital from the equity market, flight to safety. You mentioned some of the bond market moves at the opening of this segment. If we had seen rates move more violently to signal that there was a real reversal of flows out of equities into bonds, a real flight to safety, that would have given me pause or indicated that maybe the window is closing. I think, again, there's a little bit of fatigue, a little bit of digestion. It's been a historically active issuance market. Institutional investors have also done incredibly well. And oh, by the way, it's August next week. And so this is sort of a time in the market when folks tend to try to take a break.
Michael sees the same thing. Rotation, not liquidation. You have segments of the market performing really well, other segments getting beat up, and it's expressed here on the S&P right at 7450. Again, just about 2% down from your all-time high 2.22%. And with the Fed pausing tomorrow, not raising, when the Fed pauses, bullish catalyst. If we got to see how the markets handle the rest of those mags this week, if they handle them well and money comes back in to buy other things, you're going to see the market elevate up. If you get more selling pressure, the key levels to watch are 7,300, 7,200. And if you lose 7,200, that's how you know you're getting a larger correction. We are in the correction right now, guys. This is the correction. The question is the duration of the correction and the depth of the correction. So that's the only two questions. And we're going to get some of those answers this week, starting tomorrow with the Fed. Breakout above 76.25. Guess what? You're at new all-time highs. Next target, 78.69 to 8,000. Let's look at the NASDAQ. Again, here's your targets. I got to erase his minus 75%. I'm sorry. I can't deal with this level of retardation this early in the morning or this early in the afternoon. If we're looking at this on the NASDAQ, guys, I'm going to bring you back to reality, right? So we're looking at reality here. So what's the NASDAQ doing? Well, from your rally that you did from March, when you went up 35%, you just did a 382 retracement, right? So yes, the NASDAQ's down more. Why? Because all the companies that are affected with the selling largely are tech and tech adjacent. So you're down 10.7%. And actually, as of today, you're down about 9%, just over 9%. So that's your retracement so far in the NASDAQ. You do not even have a pullback yet in the S&P, and you got a 9% down move in the NASDAQ. So the move to watch the NASDAQ for is once we get through the mags, let's see where this goes. If they sell the mags off, if it drives the index lower, next level down is a 50% retracement. That is 26,793. Could it happen? Of course it could. I have no idea what their numbers are going to be. I say this all the time. Nobody does. The analysts are guessing what their numbers are going to be. But if you lose support, 26,793. Okay? If the market likes what it sees, watch for this to regain, get back above 28K, and then you want to look at your rebound because it's all going to be about that rebound. Can you make this turn into a bullish pattern to break out to the upside? And if you cannot, then you can look for this. If you're bearish and you think you're going to get a much larger correction after a rebound, then watch your levels. 29.5, 30K, that is your kill box right in that zone. Meaning if the market was to do something like this, come up to 29.5, 30K, top out, start breaking down, got to break your low. This would be failing above your high. This is your classic double top breakdown. That's what you would need to see. But guys, I think you're in the correction. This is the correction. The question is, are we dipping down another level or not? And then we're going back up, okay? You're in the correction right now. So if we look at this on the Russell looks like it wants to explode higher. Look at the Russell. There's our long-term trend line, right? Here's our long-term trend line. Drawn this out for you guys. This thing is played out beautifully. False break low, multiple retaps, and then you're right on it right now. We came right up to the target I gave you a year and a half ago, 3,000. We came right up to the target, 29.50. We got up to 3,050. And look at this. You're sitting on the trend line. So again, we're in the correction. This is part of the correction. Can it go deeper? We have to see how the markets treat this week. If the Fed hikes, everything's selling off. That should be common knowledge. They're not going to hike. That's not the base case for them to hike. The market priced in a 33% chance. But on top of that, I know Warsh doesn't want to hike because it would do absolutely nothing except make people unemployed, right? That's all it would do. But you want to watch any type of rebound that fails underneath your all-time high, because if you're bearish, you want to see that double top and you want to see it break the low and break down. But I think you're going up. Once we get a resolution of this week, we're going to see this climb and break out the next level targets, 3,100, 3,200. That's where we're going. We're at 29.50. That is the next level up. And the Russell looks like it wants to go higher. I like this angle that it's selling off at as well, because if I draw this thing out, something like this right here. Look at this. This thing just looks like it wants to break right out to the upside. It's just pushing up. Look at the compression on the RMA trend flip. Look how nice and tight this thing is. This just wants to go boom, and you may get that initial move with the Fed not hiking. Now, a lot of people probably asking, yeah, but what's the actual pathway? Again, what's the pathway to get to these higher levels? Because those higher levels, just to backtrack for 1 second, again, those 7,800, 8,000, how do you actually get there? You're talking about the Fed not hiking. We don't know what the mags are going to do. Well, it's going to come down to earnings. And let's ask Binky. Binky might know. Lee, play some Binky.
I mean, the easiest path to 8K is, you know, a range-bound period. We've got earnings in terms of the numbers growing at, the consensus says 26%. We say 29%. If you take the beats so far seriously, we're talking about earnings growth in the 30s. And I'm not talking about a tech company. I'm talking about the S&P 500 as a whole. Valuations are going to get cheaper. And so the market's going to go up unless, you know, some big tail risk is realized. So a summer pause is not really unreasonable. There is the uncertainty, you know, about the midterm elections. And what I would say is, you know, just in terms of thinking about 8K, just remember that midterm election years, Q4, so starting a month before the midterm elections through the year end, 21 of the last 23 midterm election years have been positive returns, so the risk reward is positive, and the average return is 7%.
That's right, guys. Like I said, it's all about the earnings. And Binky understands the cycle. He just gave you nearly 90 plus years of data on the midterm election cycle, part of the presidential cycle, the 4-year cycle. And on average, 21 of 23 times, you have to multiply that by 4. That's how many years you get. But 21 of 23 times, the market has gone up an average of 7%. Between November and December. So again, we're in the correction right now. We have to see the depth of it. We'll see it this week, and we'll see how strong of a move it is. But guys, I'm uber bullish on the market. Whether or not we correct into August, we'll find out after this week. But I think we're going to be going to some epic gains in the marketplace. Let's move on to the DAX. Look at the DAX. I drew this last time I made a video for you guys. Look at the DAX. Is it doing this move right now, right? Again, global indices here, guys. Look at the DAX. Does that look bearish? DAX is pushing up. It's about to try to break out once again, just like it did here. Try to break out to the upside. DAX targets 26, 27. There's your 2 DAX level ups. Look at your trend, your low, higher lows, higher highs. Trying to break to the upside if the Fed does not raise, and I know the DAX is in Germany, half my family's in Germany. If the Fed does not raise, you're going to see the DAX follow the US markets, and this thing's going to break out and it's going to move up. So let's continue on over to Bitcoin and some of the cryptos. Let's start off here with Bitcoin. The one key thing I want to show you on Bitcoin here is the 108 RMA. Look at the 108 RMA. You're beneath it right now. You see that right there on my screen? I want to show you why this is key, because this will determine whether or not the bottom is in. If you're watching FinX, right, or crypto Twitter, if you're looking at what people are saying, you got a bunch of morons arguing about whether or not the bottom is in. But all you have to do is find things, you know, analytically, I would say, and look at the probability of things playing out. You guys know I like market math a lot. So we look at 2022 after our sell-off, right? Remember over here, by the way, when you talk about forecasting, over here was when I was telling you the top was in and we're going to 10.5. And this is when everybody else was telling you 500K, 250K, 1 million. Go look at the YouTubes back then. And where did we go? We fell all the way down to 15.5, but look at the 108 RMA. I think where we are is right here. we are at the point where we're testing the 108 RMA. Notice how you get a pullback again. You break out above it and you never get back below it. After you break above, after you base below in 2022, going into 23, once you actually broke out above it, you never got below it. And price went from 22K to 126K before it finally lost the 108 again. And you could say, well, that's one instance, right? Does that mean anything? Let's look at the history on Bitcoin. If you look at Bitcoin here back in the pandemic, 108 RMA, pandemic gets you below it. You get a weekly below it. Once you get above it, you end up going from 5,500 all the way to what did it get to? 67? I forget now. 65? You went from 5,500, so you gained 60,000 points. You gained 100,000 points after 2022. You gained 60,000 points after the pandemic. What about if we go further back and look at it here? Now we're getting back into the teens. So we look at 2018. You can see you got below the 108. Once you got above the 108, you never had a false breakout and then went back below it. When you got above the 108, price was right here. What was that last candle here on the weekly? About 5K. You went from 5K right there. Actually, it's about 38.50. 38.50 all the way up to 13,880, about 260%. You went up 260%. So as you can see, the 108 going all the way back into the 20 teens. Remember, Bitcoin's only existed since like 2008. Going all the way back to the 20 teens. If you can flip this 108, this is going to tell you if the bottom is in or not. If you can get above this, and right now this is sitting at, let's actually get the precise measurement. It's sitting at 66,872. Price is at 63,990. If you can get above this and make some momentum to hold it and get above it, not just throw some wicks, you haven't, every time you've flipped the 108, you've gone on to epic gains, 60,000 points, 100,000 points, a 260% rally. So this is kind of everything right here, just watching that level on Bitcoin to see if it can flip it or not. And again, that's 66,872. If we can get above it, first targets are 70,000, 73,000. Then you got to flip 77. If you can flip that, you're going higher, 92, 100K, right? We're not there yet. We're at 63,983, just below 64K. Let's look at total. Total, we need to see a breakout on total. This has been a bullish accumulation, meaning higher lows and higher highs. Here's your low, high, getting some higher lows, higher highs, came back down, retested the trend line. You need to break out. Again, we are in the correction in the stock market. Because we're in the correction in the stock market, you have a muted crypto reaction right now. But once the market's correction's over and the next leg is beginning, I believe you're going to see the cryptos break out. Again, we don't know how deep the correction will be or if we're going to sell off into August, possibly September. We're going to find out a lot of that data this week with how the market reacts to the remaining mags that are reporting. You look at Bitcoin here on the 8-hour chart, key support level, 63,463, came down to it a couple times, came down, bounced right off the trend line. Beneath that, you got 62,384, 61,3. This overall has been a bullish climb up higher, but you're not bullish from a trading range perspective until you exit above 67.3. So you want to watch this move right here. If Bitcoin gets any momentum, you need to flip your kill box, which is 65,750 to 66,267. That needs to flip to break out of this trading range to go up to new highs. Again, this is a move Solana already did. This is a move Ethereum already did. Bitcoin has not done it yet, but your first key resistance is right there, 65.7, 66,267. And once you flip it, then you can start talking about the 70s as targets. And we're going to see some key data come in this week with the mags and the market reaction to the mags and the tech space, and if cryptos can hold up. So far, you're holding up nicely because that correction is already 10% in the NASDAQ, and Bitcoin has been climbing, right? Down here, but you've been climbing off your low. I know we're not up tens of thousands of points, but this is part of what a basing process is. So we're going to keep tracking this in correlation with the markets. You look at Ethereum, again, you exited the trading range, you're at 1924. You came up to the 50% at 1983. That's the level you got to flip. If you can flip it, 2100. 2250. Those are your next two targets. Your key support level there is going to be 1850, and then drop it by $50 increments, because that's about what it comes out to. 1800 just underneath that. You're at 1923. Got a trend line of support going up as well. So you're kind of in a volatile, choppy state, and that's where you're at in cryptos. That's where you're at in a lot of these markets. It's a trader's paradise if you like scalps and quick entries, quick exits. But for everybody else that just wants to invest and hold swings, which is, I love to swing trade. This is my primary method of trading. You can't do that in these markets. You need a breakout for that to be the case, or a severe breakdown. Solana exited the trading range just like Ethereum. Solana led the way up. Now Solana's coming back down. You got to wave up, 3 waves to a top. We already hit our 83.71 target, which I gave you back down here around the 62.55 range. We already hit that target. Next target level is $90, but you got to get momentum reversing back up to the upside. Did a 50% retracement here at 73.98. Got a wick below. Price is currently above. Next key support, 71.63 at the 618. That's the next level to watch. And if you start reversing, if markets start getting really bullish with the Fed pausing tomorrow, watch for Solana to climb up. You got to flip 83.71. If you fail underneath it, then you could be making a larger double top structure, right? You have to watch these tops. So these are important things. These are important levels to watch. This has been a fun video. Hope you guys enjoy it. Hope to see all of you on the Discord. You guys have a fantastic week. Enjoy the weather, and I'll see you on the next one.